Hello, 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 hello. Happy after Super Bowl Monday. How's everyone doing? Good morning, Jacob. Good morning, Royal Palms. Good morning, Mark. Good morning, Sterling. Good morning, Patrick. Oh, what else? Where are we? Good morning, Heinrich. Good morning, Jake. Good morning, Balaji. Good morning, Ted. And Sterling putting in the earnings. Thank you for that. And some other key things. I'm really glad that Monday.com reported on Monday. It would be very ironic if they reported on another day. Do you think they set that up? But they had a beat stock down 18.54%. So, what did everyone think of the Super Bowl? What did everybody think of the halftime show? I need closed captions for that. Understand what was going on. Hello, Daniel. Hello, Charles. What else? Good morning, Yogi. I like that. Yogi Trades. What is it? Good morning, Super Bowl square winner with number 2 and 0. With number 2 and 0. Number. What am I missing? What am I missing? It's too early. There should be a holiday the Monday after the Super Bowl. There should be a holiday. I vote for national holiday after Super Bowl. So, uh, what else? What else we got going on? It's luckily not much is going on. We have massive rally on Friday. The Super Bowl game was so boring. QB couldn't handle pressure. Shout out to all the Seattle Bros. It was the first half was until it got to the fourth quarter. But geez, the first half. What was it? 4 field goals. Maybe I should follow the NFL's lead and start typing the news and earnings in Spanish. But then I won't. I did take many years of Spanish, but I've forgotten it all. I have forgotten it all. Little light though, little English. Uh so what do we got going on? We have Fed speak today, and that's about it. Consumer inflation expectations at 11 Eastern. So today is very quiet. Luckily, it's quiet after the Super Bowl. Uh, what else do we have? Tomorrow we have the retail sales back from December. We're finally getting that print back from December. We have the ADP numbers, that are weekly numbers that come out now. Uh, We got Redbook. Every Tuesday, unless there's a holiday. We got what else we have? Business inventories, but it's mainly retail sales tomorrow. Wednesday, we have the delayed from last Friday payrolls numbers. The January payrolls numbers that were supposed to be last Friday, but delayed due to the short little shutdown. And we have the crude numbers. So Wednesday with those payroll numbers could be a little more volatile than expected or volatile than normal. Thursday we have jobless claims. It's a light week though. And Friday is probably the biggest day. We have the CPI numbers from Friday. I mean from January. We have the CPI numbers from January. And then, by the way, next Monday is another holiday. So they should have that holiday today. Can't we? Let's make next Monday's holiday today. Then we can just chill out after the Super Bowl. All right. We have the chips and everything pulling back a bit today. Mega caps pulling back a bit. Oracle bouncing. Microsoft bouncing. Planters, Peanuts bouncing. Lilly a little stronger. Is that App Lovin'? My favorite name. Apple. Whoa. See what happens after the Super Bowl. What else we have? Groups. We have basic materials leading the way. You got a lot of negative stuff. Not surprising after technically last trading day yesterday, but Friday's very strong rally. Friday's very strong rally. I guess say good morning to Anissa. What's this? Oh, the third quarter score was 12-0. Thank you, holy. Interesting party trick for the math nerds in here. Research and learn Caprica's constant. All right. Jake did not watch the halftime show. Well, yeah. I was baking a Pequod's pizza, or I should say reheating from frozen a Pequod's pizza because that's the only way I can get it out here in Arizona. So that's what I had for my Super Bowl meal. So Fed watch today. We're still at 84% for a pause in March. We're still at the upper end of fear mode even after the strong rally. I don't know how with that strong rally it's still in fear mode, but whatever. And Schiller PE back over 40. In terms of earnings this week, after the close, not much. After the close, very, very little. There's a lot of companies reporting this week, but not much that's going to move the markets overall. We have Coke, we have CVS Health tomorrow morning, Spotify, Robinhood after close tomorrow, Lyft and Ford, Shopify Wednesday morning, Kraft Heinz, T-Mobile, McDonald's, Apple Oven. There's the Apple Oven after close on Wednesday. Cisco. There's my Cisco. Thursday. Let's see. Crocs. Has anybody seen the Lego brick Crocs that are coming out? If not, Google it. Lego brick Crocs. I don't think you're going to be walking around in those though. Coinbase, Pinterest after close on Thursday. Uh, Friday, Wendy's, Advanced Auto Parts, Moderna. But lots of companies reporting, not a lot that's really going to move the markets, stuff that'll move those companies. All right. All righty. So we had the massively strong rally outside key reversal day on Friday. So not surprising to see a slight pullback right now. I'm keeping an eye on the 4-hour rotation zone. 4-hour rotation zone. I'm looking on pullbacks there. If we drop below there, then I'm looking at 68.92 area. Then about 68.70. And then below that, the major line in the sand for me is right at this 62.5. If we do pull back and retrace the bar, the bigger thing, I'm going to bump down this level a little from this 68.70 to more of the 50% harmonic run up, this 68.65, and then down to 68.37. If we lose 68.37, I will have to shift back to retesting Friday's lows, but any of those areas, I'm still looking for bullish bounces, especially into the 4-hour rotation zone. So that's what we sit with that. So that's the key level. If you want the key line in the sand, 68.37. Based off the gap up, and we've already filled the gap from Sunday night to Friday. So 68.37 is now the key line in the sand. All right. So still looking because we've had also we closed Friday. Not only triggered a percent B buy also, and it closed back above the 62.5, shifting the probabilities that we could now. We've already taken at the 75% harmonic, but we could still see a return to this, like closer to the 7,006 area. Does this mean we're going to new highs? No. We're slowly breaking down and rolling over. We are slowly breaking down and rolling over. So short term, I have to still go with the probabilities with the and the patterns, but longer term, I'm still watching for consolidation and possible breakdowns. NASDAQ did not trigger a percent B buy, came very close outside reversal day, but the NASDAQ's got some more heavy lifting to do. It's now spiked between the 50 and 62.5. Remember, it has not closed above the 62.5. So, and it's got to get through the rotation zone and the rolling over 8 EMA, which is now rolling over 50-day EMA, which is now resistance. So the key thing is 25,558 on the NASDAQ on a closing basis. It already bounced off the 25,294 area. Okay. Right now, it does not have the first cross the rotation zone. It's flat out. The key line in the sand on any pullbacks on the NASDAQ, since it has not triggered probabilities or a percent B buy, I'm not as bullish at this until it can get above that 25,558. Key resistance is about 25,235. Pullback areas, I'm looking at about 24,930 area. The major is between 24,793 and 24,654 if we do pull back there. That would be the 50% retracement from the lows on Thursday to the highs Sunday night. If we close below 24,654, I got to go for the retest of Friday's lows. For S&P teaching, there was a no 4-hour percent beat buy or double bottom, and by the time the daily percent beat triggered, the risk rule was off. How could this have been played otherwise? It was just a momentum play. There wasn't. This did not trigger on the 4-hour there, the Thursday to Friday. It just became a momentum play. With this, it was just a strong momentum play on Friday. That was it. That's the only way it could have been played. And by the time the percent beat buy triggered, it was late Friday afternoon. There was, and reward to risk is way off. The reason I'm noting it is because we could still statistically see some follow through to the upside. It may be very limited, but we could statistically see some more follow up into this major resistance area. But no, would I just buy this at the close, especially on a Friday, with the stop having to be all the way down here, or use a modified stop for limited upside? No, I would not. That's why I'd be looking for pullbacks still. Okay, Jake? I'd be looking for pullbacks still. That's why back to the S&P. As long as we don't close, I took it off already, but as long as we don't close below that 62.5, I'm looking for pullbacks. Just because we had some probability shifts. And these are not pullbacks to go to new highs. Could they go to new highs? Yes, but I'm more watching for major resistance up here. Does that make sense, Jake? So I am not suggesting you would have bought it on the close. I'm just noting that that's what happened. Whereas the NASDAQ did not trigger the percent beat buy. So I'm not as aggressive with the NASDAQ. The Dow, which broke to new highs on Friday, holding the 50. If you're trading the Dow on any bigger pullback, now key support is 49.8. But really watch, if we do start getting a bigger pullback, it's been the 50 has been the stick saving area for the last little bit, and we're still getting higher lows. So the Dow finally broke above the resistance from all of January. So that's where we sit there. The next key area is 50,500 on the Dow. 49.8 is very key support. Russell, again, hitting the second target on the inverse head and shoulders. If we close above 2680 or trade through 2703 something, then it's off the table. It's pretty much off the table. This was also percent beat buy on Friday. Would I look with this kind of thing? There's no reason to hold anything left for the head and shoulders. All right. For the Russell again, it was a very key momentum play and key support coming back in at 2663, 64 area. If we drop below there, I'm watching quantity to closer to 2648 to 2650. The major line in the sand, the only thing I can do to get bearish again on this is if we start closing below 2612. Otherwise, I got to go with the reversal probabilities. Yeah, momentum can be tricky, but when you start seeing bars strung together and really start look at that 15-minute chart. When you start just seeing pullbacks in the rotation zone that keep getting bought on the 15-minute bar, that's a little tip I can give you. VIX, we're still have volatility even with Friday's Friday's strong reversal, but I'm still keeping an eye on this trend line and still looking to re-add volatility hedges on pullbacks. So this market is, again, when I say I'm short-term bullish, that's just for some follow-through. Again, not necessarily new highs. I'm more getting very cautious, which is why I keep talking about hedging. The DAX, not much. DAX has to get above 25,130 to shift the probabilities. Otherwise, I'm in neutral to possible rollovers. The yields bouncing, confirming the double on Friday, not triggering it after Thursday's flight to safety. Gonna be looking at that, but we'll see. Again, that's the only thing that puts me in short-term pullback mode on yields. Other than that, if it closes back above 4.266, the potential double is that's not triggered yet is off the table. Crude, come on, crude. Still, as long as we do have a potential double top here. So as long as that's not triggered, I'm still looking for bounce play setups. Right now, it has got to get above 64.15, or I'm looking closer back to this 62, closer to about 62.35 to about 61.65 for a pullback into support. Natty gas, this might be rolling off the table already. Let's see if it is. We did have a potential double earlier. If it drops below 3.029, it's off. The potential double's off the table. Other than that, it's the only thing that can put me back to potentially bounce mode. In natty gas, gold. Following through, by the way, gold on Friday or Thursday had a percent B buy. Sorry, Thursday, this was a percent B buy. Now, gold still has been rejected from between the 50 and 62.5. Remember, that's the key area I watch. But we have had the daily percent B buy, which is still completely valid in 4 hour. Gold still has to follow with a close above 5175.5 to shift the probabilities. Otherwise, it's still raising stops. And if it rolls over and it stops it, oh well, the bounce has failed, and I'll watch for a retest of the 50 and a possible breakdown. Silver, on the other hand, we broke down on Friday, recovered it, filled the gap, and now we have the first cross rotation zone. Silver's got a lot of heavy lifting and has not had a lot of good buy signals. Like even the potential 4 hour percent B buy did not trigger. So there's been nothing in silver yet, at least from my perspective. We had some divergences down here, but not great. So silver's really got to at least get back above this 87.50 before I'm looking at it at all. Copper, not much to talk about. Dollar index getting sort of smashed today. We had cycle tops, was looking for a rollover. We broke below Friday's lows, so now my key line to sand is 96.15 roughly. I'll still be looking for buy setups between about 96.40 and about 96.15. Still be looking for that patiently. Euro breaking out to the upside. So going to be looking at this key retracement area with the dollar getting hit. The key between about 119.20 and about 119.64. What else? We have the good old Bitcoin, which bounced back on Friday, but again, we have the overhead rotation zone. 7,500 is very key resistance. If pop above there, we're looking at about 76,250. We don't have a strong bottoming pattern. No major buy patterns triggered on this. There no key things. There was a little percent B buy here, but it's not followed through. I'm still watching for rollover plays in Bitcoin. And we're still below the major resistance level it broke down from. So, rallies, I'm not looking for anything major there. Spiders, again, you had the percent B buy. This one was easier to deal with because it was triggered way earlier in the day, or it was the setup was there, broke above Thursday's highs. way earlier in the day and then followed through. This one was the one that was easier to trigger. I agree, OD Green. There's been too much put into AI. Like it was going to solve all the problem. Nah, it's not. That's why we're going to see, and all this capex going into it, like it's the end all and be all. I think there's going to be some major disappointment. So that was your spiders. Little gap down today, 689.43. So 690.62. And here's your key level from the. We're already above 62.5, so it already pretty much ticked off the 75% also on Friday. So if we rally again, I'm still looking at 692.33 area, and then above there 695.08. On pullbacks, the key thing for pullbacks in the spiders, major 684.05, which is the 50% harmonic, but then the only tipping point is 681.98. Otherwise, I got to start looking for pullbacks, and I'm looking at the 1 hour rotation zone on these spiders. The 1 hour rotation zone for pullback. That's the first area for the pullbacks I'm looking at. So the Qs also, this did trigger a percent B buy, but there's remember overhead resistance of the rotation zone and now the 50 EMA. So that's where we sit there. Again, not as bullish on the NASDAQ and Qs until it can get. It's got to do a lot more heavy lifting. 613, and then I'm watching closer to right around about 617.50, 617.75 is key resistance. IWM also percent B buy in there. Still just missed closing above here. I'm pretty much pulling these off. I mean, we can. Oops, wrong one. I can put them back on if this rolls over, but this was something would really have to happen before this would collapse back down. So that's where we sit. The key stuff on the IWM for those, the 62.5 is 265.39. Close above there, 267.46, 269.53 on the probability shifts. The key tipping point on any pullback on the IWM is right around this 259 area. So any pullback, even, and I'd be looking at the 1 hour on this too for pullbacks, for rotations back up if you're trading the IWM. AI is the only way to get growth without wage increase and keep costs down. What's the cost of AI? I mean, that's it's going to get interesting. And all these productivity gains, I don't think it's going to be, not to the extent they're counting on. Because you still need people to constantly check AI. Oh boy. All right, so that's Monday morning recap. This is why we need it off after the Super Bowl. Tesla bounced, but again, I'm looking for rollover plays in here. Did trigger a percent B buy on Friday, but we're right up against the rotation zone. Longer term, we've checked back off the 87.5 from the breakdown. Very key is where the 200 is at the lows back from middle of November with the double bottom. Okay? You lose 380, it goes into uh-oh mode for the Tesla bulls. So that's what's key there. NVIDIA, which is confirmed, but did not officially trigger on the weekly basis the head and shoulders. But it is confirmed. It would have to get back above this 196.20 area to invalidate it now. But this sloppy head and shoulders is confirmed on NVIDIA. Also, we did not follow through yet. We caught on the 50 in Broadcom, the 50 week, and bounced a little, and we have not hit the first target. So I'm still watching for rollover plays in all these AI stocks. There's some massive panic buying on Friday, but it did not do anything to invalidate these patterns. ONDS, please. ONDS. Wow, drop below that. Drop below the key support, pulled back. Did it invalidate the 62.5? I don't think so yet. But it lost that key support area, which was not necessarily as bullish. So it did. See, now from this would not be, personally, any bounce plays would be bounce plays only. It closed back below 62.5 on Thursday. Little bounce on Friday with a %B buy, but you have the rotation zone right overhead. So the only thing that would put me, because again, it triggered probabilities that this thing could easily retest at 200 now. The only thing on a bounce, it'd have to get back above 1267 again. Otherwise, I'd be looking for rollover plays, just based off the probabilities. Now it is back in the weekly rotation zone, but it off these harmonics, it tipped it that we could see something with, so it has to prove itself out now. I'd be looking at last week's high area, or getting at least above $11 again before I'd be getting more bullish on this at all. I don't think I missed. Sterling had something in here earlier. Where is it? Sterling, which one did you have in here? Was it APO? Was it APO that had a double bottom? Yeah, it looks like it. I think you had APO in there. 125.13, 125.01, so it did barely qualify. And looks like it is bouncing back up. So APO looks like it's going to trigger a double bottom potentially today. So there you go, from Sterling Apollo Global Management after their miss with revenue but beat on EPS. Now, where does that fit in with the retracement harmonics? Ooh, second target right at the 62.5 nearly. So that would be very key on any continued, and right by a breakdown zone. All right. Can I take a look at MP? MP. Let's start with where it bounced to. That is, if it loses this key area, especially on a closing basis, the 50-week, I would not remain bullish in it. Right now, that'd also be below the 200-day, which was already key support. Right now, the only thing that would put me bullish on this again if it started getting above this key resistance area. Otherwise, it'd just be scalpy bounce plays. If it loses to 200 on the daily and then loses to 50 on the weekly, I would not be maintaining long. This thing could easily break back down to 30. However, now to the upside, again, on any bounces, it's got to sustain. What was the high close in here? What was the high close? It really's got to close back above 69.58 to sustain a breakout. That's going to be your key closing level to watch for. Charles is looking at all these cheap stocks, but there's now Is that no ignition right now and no bottom either? Yeah, there we go. No ignition. Again, I'm staying in minorly bullish mode on pullbacks, but overall, more medium term, I'm watching for more downdrafts. That's why I keep watching this VIX, especially on pullbacks. Thanks, Inman at 18. So just checking it. Well, you might want to consider at least knowing where your longer term stops are. Okay. At least, or take something off the take, because again, if this starts breaking down again, you can always add back in at a key lower level. I would not be exiting, but I know where some of my longer term stops are to at least take something off the table. Patrick. All right, with that, I will wrap it up for today. Thank you everyone for tuning in, and I shall see everyone tomorrow. Bye for now.